Storeholders at these markets are hoping shoppers will soon have more cash to splash after the Reserve Bank cut interest rates.
Amazing, that's great. Great for everybody. That way they can spend more on food.
That's good for families, it's good for business, and it's good for workers.
The RBA sliced 0.25 percentage point off the cash rate, taking it down to 3.85%, and the big four banks were quick to pass it on. Facing a new set of challenges, the RBA governor remained cautiously optimistic.
I think it's a confident cut in the sense that we think this is the right decision at this point in time.
They've revised down their growth and their inflation forecast. They've revised up their unemployment rate forecasts. So basically, they're taking some of the restrictiveness of monetary policy out.
Donald Trump's Liberation Day tariffs have changed the RBA's playbook for where our economy is headed.
Us, just like everyone else, was completely blown out of the water by the scale and the scope.
How concerned are you that inflation might get out of control again, and as a result the Reserve Bank may not be able to deliver further rate relief that so many borrowers are desperate to see?
Interest rates, I know, have impacted people who have loans really severely, and they've been under the pump. We do need to make sure that we keep inflation low and stable. We have got a little more comfortable, just a little more comfortable, that things are going in the right direction, so we can take foot off the brake just a little bit more.
If lenders pass on the rate cut in full, homeowners with a $500,000 mortgage should see their repayments fall by $76 a month.
This is very welcome relief for millions of Australians. We are really pleased to see more help is on the way for working families with a mortgage.
The RBA governor hinted at further cuts.
If we continue to observe inflation coming down and staying down sustainably, that would give us opportunities to lower the interest rate further.
Economists believe it could be just months away.
I think the Reserve Bank potentially has another 2 in it this year, but again, it depends, of course, on how things eventuate.
We had been expecting about 1 or 2 more cuts next year. I mean, basically our profile for the cash rate is that it will end the cutting cycle somewhere at about 3%.
But if we see any more than that, it could be a sign the Reserve Bank is feeling extra worried about the economy, especially with all that uncertainty sparked by Donald Trump's trade policies, which seem to change day by day.
It's been a complete roller coaster, I'd have to say. There could possibly be a recession, yes, but that's in the very extreme circumstance.
And how much are you looking to borrow?
Any rate relief is welcome news for Bobby Lamb's clients, who've been struggling with higher mortgage repayments.
The general sentiment in the market is still one of gloom because of how high interest rates have still been, and that the household costs are still so inflated.
At least 30 lenders will now offer variable rates below 5.5%, beating all 4 major banks, according to Canstar, while the average variable rate will be just over 5.8%.
So maybe we just talk about your current circumstances.
Bobby says as many as 1 in 5 of his clients are having trouble switching to a better rate.
A fair few clients now under pressure to sell homes instead of being stuck in this mortgage prison where they've got high repayments for the next few decades and not without any ability to do much else.
Tough decisions in uncertain times.